Hi guys, welcome back to TipRanks. My name is Annika and here at TipRanks we love to hear what different stocks you're looking at and your opinions on the market sentiment. Today we're looking at two stocks that JP Morgan says to buy that are massively oversold. And before we jump into this video, guys, don't forget to hit that like button and the subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. As we know, 2022 has started off with a lot of market volatility. There have been huge sell-offs for a lot of major stocks. This has been a sharp reversal from last year's bullish trend. But when we see low prices, that is a market opportunity, especially when the company has great fundamentals. So that's why we're going to look at two stocks that JP Morgan deems a buy. Because although they have low prices and they've seen major sell-offs, this is an opportunity to get in at a good time. The first stock is Ultragenyx Pharmaceutical and its ticker is RARE. Ultragenyx is a commercial and clinical stage biopharma company focusing on rare diseases. These diseases are defined by the FDA as affecting fewer than 1 in 50,000 people. As such, they have a small patient base and limited prospects for drug sales to reimburse the high cost of development. So Ultragenyx spreads out these costs by operating several of its development lines in partnerships with other pharmaceutical researchers, and it works assiduously at commercialization of its approved products. They have many drugs that have been approved, but also some that are still in preclinical stages and in phase 1, phase 2, phase 3 stages. On the financial front, the company has seen success. In Q4 of 2021, Ultragenyx showed $83.4 million in total revenue, which was in line with consensus expectations. The total included $55.5 million in revenue from burosumab, branded as Crivita, as well as smaller sums from two other commercial stage products. Trihepatinoin saw product sales of $11.8 million, while Vestronidase Alpha, which has a trade name Mepsevii, brought in around $3.1 million. Dojolvi is still in the launching phase of its commercialization, and so its revenue number is considered encouraging. The drug had 270 US patients on reimbursed commercial therapy at the end of 2021. So for the full year, Ultragenyx reported $351.4 million in total revenues. This was up 29% from the $271 million reported in 2020. The full year gains reflect increased sales of Crivita as well as the launch of additional drugs. The company finished the year with $1 billion in liquid assets available for funding the development pipeline. Ultragenyx has several advanced programs in this pipeline. Notable among this is GTX-102. And this is being researched in collaboration with GeneTX. This drug is a potential treatment for Angelman syndrome and is currently in phase 1 to 2 clinical trials. The first 4 patients in Canada and the UK have received multiple doses without adverse effects. Patient dosing has begun in the US, and the next main catalyst on the calendar is that the company expects to release the safety and efficacy data in the middle of this year. The company's most advanced research tracks involve 2 gene therapies, DTX401 for the treatment of glycogen storage disease type IA, and DTX301 for the treatment of ornithine transcarbamylase deficiency, OTC. Both of these have completed early-stage clinical trials and are progressing to phase 3 studies. The first patients in the phase 3 glucogene study of DTX401 have already been dosed, while the phase 3 ENH3 HANCE study of DTX301 is expected to begin later in the first half of 2022. The 2 studies will last 48 hours and 64 weeks respectively. The current price for Ultragenyx Pharmaceutical is $66.71. The analyst rating consensus is a strong buy and the analyst price target is $139.10, which is a whopping 108.51% upside based on 10 Wall Street analyst ratings for the 12-month time period. And JP Morgan's 5-star analyst Corey Kasimov deems it to be a buy, and he says that as a diversified orphan disease company with tangible assets, 2022 catalysts, and a strong management team, we can no longer ignore this opportunity. The mid-year GTX-102 Angelman update is clearly the key event, and management continues to sound very optimistic. We acknowledge that there's a writing on this update. We're not trying to call a bottom on the market, but we're increasingly constructive on stories with real assets, pipeline optionality, and upcoming levers that offer favorable risk to reward. And we believe Rare meets that bar. The second JP Morgan stock is Goodyear Tire, and its ticker is GT. Goodyear is one of the world's top 4 automotive tire manufacturers, and they are the largest ones in the US. The company's most recent expansionary move was its acquisition completed last year of the Cooper Tire and Rubber Company. The buyout cost Goodyear around $2.5 billion. The acquisition was worth it for Goodyear. However, this tire giant has reported solid numbers in its Q4 2021 and full-year results. The Q4 revenue came in at $5.05 billion, the highest in more than 2 years, and this was up 38% year over year, while EPS was at 57 cents per share, which was beating the 33-cent forecast. For the full year, total revenues were $17.5 billion, and this was over the expected amount of $17.3 billion. Annual EPS was reported at $2.09, which beat the $1.82 forecast. Despite these solid results, Goodyear's shares fell sharply after the report, and the stock is down 33% from the peak it reached in January of this year. The fall in stock price is attributed to management's concession that inflationary and economic pressure are rising against the company and will likely worsen in the course of 2022. Goodyear also faces rising costs across its supply, manufacturing, and distribution chains, and on everything from labor to raw materials to shipping. The company estimates that the raw materials alone will increase costs by $700 million to $800 million in the first half of 2022 compared to the first half of 2021. The current price for Goodyear Tire is $16.01. The analyst rating consensus is a moderate buy, and the analyst price target is $22.40, which is a 39.91% upside based on 6 Wall Street analysts offering 12-month price targets. JP Morgan analyst Ryan Brinkman deems it to be a buy with a $23 price target, which is a 43.66% upside. And he says that the sell-off strikes us as an overreaction given what foresees as a much more modest needed reductions to consensus SOI and free cash flow. He also says that because pricing has been quite strong so far this cycle, with Goodyear posting its 6th consecutive positive quarterly price mix to raw materials spread ratio in Q4 2021. This suggests the possibility of better than currently envisaged ability to price for non-commodity costs, although these costs are likely recoverable via pricing over time, suggesting little impact to normalized segment operating income and free cash flow, and with the company continuing to make progress along other more controllable fronts such as merger-related synergies. So guys, those are the 2 stocks that JP Morgan deems a buy. Let us know what you think of these 2 stocks. Do you also deem them a buy? And also let us know your opinions on different stocks you're looking at and your opinions on the market sentiment. We love to hear from you. And if you made it this far, don't forget to hit that like button and the subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Remember, this is not financial advice. Make sure you do your own research before you invest in anything. Thank you guys for watching, and I'll see you in the next video. Bye!